For as long as we can remember, banking has always had these limits, right? Physical branches, the number of people they could hire, the tech of the day. But what if all those constraints just shattered? We're about to dive into a massive shift in finance, one that's promising this incredible, unconstrained future. But as we're going to see, the real question is, unconstrained for who?
And this quote from Accenture's Michael Abbott, man, it just nails the heart of this whole revolution. He's talking about a future where a bank's power isn't about how many people it employs, but about how smart its systems are. It's a total reimagining of what a bank even is.
And look, this isn't some sci-fi movie plot for 20 years from now. This is happening. Welcome to the age of unconstrained banking. The combination of super powerful AI and new digital assets isn't a maybe, it's the reality being built as we speak. So, what's really under the hood here? What's powering this new age? Well, it all starts with a pretty radical change to the most basic thing in finance, money itself. Okay, so the first huge shift is this idea that our money is basically getting a brain. For centuries, money has just been this passive thing, right? It just sits there. But now it's becoming active, it's becoming intelligent. It can actually make decisions all on its own. So this new smart money, it kind of comes in three main flavors that are about to hit the big time. You've got stablecoins, which come from private companies. Then there are CBDCs, or central bank digital currencies. That's the government's version. And finally, tokenized deposits, which come from the regulated banks we already know. Each one is a different path to the future of digital cash. And if you think this is some niche corner of the internet thing, think again. That number, $10.7 trillion. That's how much moved through stablecoins in just the last year. That's 88% growth year over year. It's already playing in the same league as giants like Visa. This is happening at a massive scale. All right, so if smart money is the fuel, the second piece of the puzzle, agentic AI, is the engine. We're not just talking about money that can follow rules anymore. This is money that can think. Imagine having these intelligent little agents working just for you, predicting your cash flow, finding the absolute best way to make payments, and automatically moving your funds to get you the best return. And the effect this is having on how banks actually work, it's already huge. Banks are seeing a 30% boost in what their software engineers can do. All that tedious, know your customer paperwork that banks have to do, it's getting done way faster and for a lot less money. And those huge, critical decisions about risk, they're being made in a snap. The efficiency here is just off the charts.
Okay, but while all this incredible tech stuff is happening, this amazing revolution, there's a totally different story playing out in the economy right alongside it. And it's a starkly different one.
31.7%. I just want you to sit with that number for a second.
What is that? Well, that's the slice of all the wealth in the United States that's owned by just the top 1% of households. And according to the Federal Reserve, it's the highest it's been in over 30 years, basically since they started keeping track of this stuff back in 1989.
And this slide, wow, it really puts that concentration into perspective, doesn't it? The projections show that by late 2025, the roughly $55 trillion held by that top 1% will be about the same as the total wealth held by the entire bottom 90% of Americans, combined.
So you've got this explosion in financial tech on one hand, and this historic wealth gap on the other. You gotta ask, are these two things connected? Right, so what's really going on here? As these two powerful trends just keep accelerating, what is actually driving this divide? It's the most important question we can ask right now.
And it turns out the very technology we were just getting excited about seems to be playing a huge role. A CBS News analysis points to a few key things. Stock prices are surging, mostly because everyone is piling into AI. At the same time, home values, which is where most of the middle class has their wealth, are slowing down. And on top of that, wages aren't growing equally for everyone. And this chart, it just lays it out in black and white. Data from Bank of America shows that in December 2025, higher-income folks saw their wages grow by 3%. That's more than double the rate for middle-income families and nearly 3 times the rate for low-income earners. The gap is literally getting wider as we speak.
And here it is. This is the direct link. According to Gallup, 87% of the people who actually own stocks, the ones benefiting from this AI-fueled boom, are in households that make over $100,000 a year. It makes it crystal clear who's really cashing in on this technological leap forward. Which brings us right back to the big question, the whole point of this explainer. We're heading into this amazing, unconstrained technological future.
But as the slide asks, unconstrained for whom?
Look, there's absolutely no doubt about it. Technology is forging a financial world that's smarter, faster, and more powerful than anything we've ever seen. The old limits are just dissolving. The rules of the game are being completely rewritten. But, and this is the big but, as we build this unconstrained future, who are we really building it for? An era of smarter money and intelligent agents has so much promise, but is it going to create prosperity for everyone, or will it just hit the gas on the divide we're already seeing?